Hello and welcome to Market Fatafat with me, Ankita Saxena, and with me is Snehi Shah. This is the show where we take you through all the buzzers in trade today and also the buzzers who are buzzing away on the back of technicals. But before that, let's take stock of where the market is at right now. Snehi, a rather choppy day of trades today, but we are making a comeback. In fact, Nifty is trading around its 100 DMA and it is finding its support somewhere around 24,400 levels, but we have managed to post a good recovery. Even the broader indices are also broader markets are posing a good recovery, trading with gains of 1% plus.
Yes, absolutely. So if you take a look at the Nifty today, 24,530 right now is where the Nifty is at. 2 tons of an uptick coming in, but it's been a recovery of more than 130 points from the day's lowest point from the Nifty. So holding on well above that 24,500 mark at least is the Nifty right now. Sensex in tandem, 2 tons of a percent higher, just crossed that 80,400 mark. Let's see if it's able to sustain because we've seen quite the dip coming in on Sensex over the last couple of trading sessions as well. India VIX, however, 2% higher, but not much to worry about. The advanced decline ratio in the favor of the declines, and like Ankita mentioned, you have the broader markets that have outperformed the benchmarks and how today, because Nifty small cap is trading with gains of more than 2%, Nifty mid cap also up 1.5%. If you take a look at sectorally what's been happening, Nifty IT clear outperformer today, 3% higher. Media, auto, metal, FMCG, PSU banks, all of these are in the green. However, Nifty Realty, Nifty Pharma, Nifty Energy and Nifty Bank nominally is trading in the red right now. So that's what it's shaping up to be like for the markets. Let's just quickly address the flashes on the bottom of your screen that we're seeing for Bajaj Finserv. It's a Nifty 50 company. Consolidated PAT has come in at 2,087 crores compared to 1,929 crores, an uptick of 8.2% on a year-on-year basis. Revenue has also seen quite the sharp uptick coming in, 29.5% higher, coming in at 33,703 crores compared to 26,023 crores as well. We'll have more figures coming in for Bajaj Finserv soon and we'll be addressing that again. But on that note, let's kickstart the show then, Ankita.
Absolutely, and Bajaj Finserv is now trading with gains of over 2%. But let's go across and take a look at what the other stocks are doing. And for that, Amar Singh, Senior Vice President Research, Angel One, is joining on the technicals. And from our research team, we are joined by Janai. Hi, thank you so much to both of you for joining us. And let's get started with all the stocks that are in focus today. Well, first up is, of course, Zomato, an earnings candidate. And in fact, a mixed set of results coming in there. In fact, the stock had slipped 5% in early trade today, despite a 5x rise in quarter 2 PAT. There it has managed to recover from those lows, and how? In fact, it's trading with gains of almost 3% right now. Miss coming in on the PAT front. Revenue has been in line. EBITDA has been a beat, but like I said, PAT has missed the street estimates. In fact, the revenue came in at an uptick of 14% on a quarter-on-quarter basis. The PAT stood at 176 crores, down 30% on a sequential basis. The margins came in at 4.7% versus 4.2%, which is a gain of 50 basis points on a year-on-year basis. Now, in another piece of news, Zomato, of course, the board has approved the QIP for 8,500 crore rupees. Also, the fundraise is purely to strengthen their balance sheet, and the QIP is, of course, pending, shareholder approval, which will be decided on the amount as per the market conditions and the requirements. Also, if you look at the con-call highlights for Zomato, the management believes that the quick commerce can get 4 to 5% EBITDA margin. They've always guided for a 20% guidance CAGR over the next few years, and they are on track to achieving 1,000 dark stores by March 2025. Nuvama is maintaining a buy and hike the target price to 325, and UBS is also maintaining a buy with the target price of 320 rupees on Zomato.
Well, absolutely. So those are the calls coming in on Zomato. But on that note, let's also go across and listen in to Rahul Jain, VP at Research at Dolat Capital. And he says that there's a significant pickup in the competitive intensity when it comes to Zomato and the entire quick commerce space. And that could also lead to a time correction in the stock. Let's go across and listen into what he had to say.
A lot has changed in the last couple of months. We have seen the competitive intensity picking up meaningfully, and there is a step announced from their perspective as well, where they want to raise capital because they acknowledge the risk that they see ahead of it. So I think from a reported performance perspective, we could see some of these impact or reactions in the coming quarter, while this quarter was business as usual. As supply, historically, we have seen in this company has been pretty conveniently absorbed ever since they have shown that path of profitability a couple of quarters ago. So I don't see that as a concern. But of course, for any investor who would see that the current earnings would be closer to 1 rupee EPS on a 12-month forward basis, the valuations are stretched. On top of it, if there's a dilution, there is a clear thought process that some of this dilution is happening because of the need for the investment in the business. So if the current valuation are high and there is no sight of meaningful EBITDA expansion, rather seeing increased competition, so there could be in general a period of time correction or absolute correction that could happen in the stock.
Alright, on that note, let's talk about Max Financial. The stock is soaring away in today's trade, almost 10% higher as we speak. And mind you, the stock is at its life high level, coming in on the back of a stellar set of Q2 earnings being posted. Net interest income has gone up by 45% on a year-on-year basis. This is the consolidated net interest income coming in at 115 crores compared to 79 crores. You also have net profit that's coming at 139 crores compared to 170 crores, a downtick coming in of 18.2%. But that's the growth was primarily driven by higher investment income, while revenue excluding investment income rose by 14% to rupees 12,820 crores in the second quarter as well. Your overall reported consolidated revenue was also up 30%, giving the number coming in at 25,178 crores. Now, Max Life Insurance, which is an arm of Max Financial, also demonstrated impressive performance with new business premiums income and both individual and group policies growing by 19% to 5,091 crore rupees. Overall, a very strong set of numbers coming in for Max Financial. The stock at an all-time high, a life high, as we speak right now.
All right, Max Financial there. Amar, you have also picked out a strong gap-up opening that we saw early in the morning. Of course, back of strong results, and this counter has been doing quite well for itself. So, do you see more upside on the charts for this one?
Yeah, so looking at Max Financials, what we are seeing is that the stock definitely has benefited on the back of its results. And if you look at the stock from a long-term perspective also, if you look at the structure of the chart on the quarterly, on the monthly charts, as well as the intermediate term trend, there's the weekly charts, it continues to remain strong and firm. And what we see today is more or less a follow-through because the stock earlier was unable to breach that 1200, 1220 zone of resistance. So that has been taken out, and the stock is rallying towards the 1300 mark. So if we look at the volumes also have been good over the last a few trading sessions, and the structure of the stock is such that it's more in favor of the bulls, and there are still no signs of any declining momentum. So this is one stock one can keep a close watch on. The stock has a potential to rally towards the 1350, 1370 mark. On the downside, the stock has got good support coming on the 1200, 1220 zone. So any pullback is a buying opportunity, and this stock is in the upward trajectory as of now.
That's the view on the technicals for Max Financial, but Jinai, you've picked out persistent systems for us, a rather steady set of numbers coming in, but the street is very excited about these numbers. Tell us what the earning fine print looks like.
Well, definitely the company reported a good set of numbers. If you look at the revenue, it came at 2,897 crores versus 2,737 crores, which is an improvement about 6% quarter-on-quarter basis. And also the PAT improved by 6%, coming at 325 crores versus 306 crores. If you talk about the operating performance, the EBIT margins remained flat. Now the company said that despite the wage hikes they took, the EBIT margins have maintained and come up with a flat 14% sequentially. We also have a note by Motilal Oswal, who are maintaining a buy rating with a target price of 6,300. Now what they believe is that another strong show by the company. If you look at the revenue and margins, they have been beat their estimations. Also, if you talk about the segmentation performance, the healthcare and BFSI segment have led the charge. Also, they continue to grow faster than the rest of the market is what they believe. And Motilal Oswal is projecting a 19% USD revenue CAGR over next 3 years for coming for persistence. And as we are seeing, the street is penciling in a good growth. Currently, stock is trading up about 11%.
Absolutely, 11% uptick in persistent. In fact, it is holding up the Nifty IT index also as the top sectoral gainer. Nifty IT almost trading with gains of 3% on the back of Persistent and Coforge. But let's go across to Sandeep Kalra, who's the CEO of Persistent Systems, who's sharing the outlook on demand and the growth environment going forward. He also added that the healthcare and the BFSI segment will continue to lead the growth. Let's go across and listen in.
We delivered 18.4% year-on-year growth, 5.3% sequential growth, and the total revenue came in at $345.5 million. Now, if you look at within that, the segmental growth, it was led by healthcare life sciences at 71.2% year-on-year, and BFSI came in at 15.3% on a year-on-year basis. Now, if we were to look at the overall demand environment, I wouldn't say that it has changed significantly. There are small green shoots in terms of financial services where we are seeing discussions about newer programs, discussions about things that are leading to either revenue growth or adoption of AI in making, whether customer experience, whether operations, or even the application development, etc., more smarter, better, and so on and so forth. Now, market still is cautious because there are dynamics like the US elections, there is the Middle East crisis.
Hi there, welcome back. Thanks Amar for staying tuned to Market Fatafat. Let's keep it going with all the stocks. And Amar, on the technicals, you've picked out Deepak Fertilizers for us. Tell us what's your view of this stock on the charts and what levels are you spotting for this one?
So if you look at Deepak Fertilizers, see the stock is overall in the long term, it's in a secular bull market. And also what we've seen is that the stock earlier had made a high of 1,062. That was in October of 2022, and post that the stock had corrected towards the almost towards the 400-450 level. And again, the stock has bounced back significantly, and it's currently trading at its close to its all-time high. So this is one stock one can keep a close watch on. Immediate resistance for the stock is seen somewhere around the 1150, 1160 zone. That's a zone of resistance for the stock where the stock could meet with some sort of selling pressure. If that level is taken out, then the stock could witness a higher move towards the 1200, 1230 zone. So this is one stock one can keep a close watch on. Immediate resistance, as I've said, 1150, whereas on the downside, the stock has got good support coming around the 1020, 1030 mark.
So that's the technical check coming in on Deepak Fertilizers, but let's talk about a stock that's not doing very well for itself in today's trade, and that's M&M Finance on the back of a rather weak set of quarter numbers coming in. They've reported a 57% increase in net profit to 369.5 crores, but despite the growth, this figure is below what the market was estimating for the company. They've also reported a net profit of 235.2 crores in the same quarter of the previous year, with the total revenue reaching 3,987 crores in quarter 2 of FY25. Now, the company's net interest income amounted to 1,963.2 crores, surpassing the estimates of 1,858.6 crores. This represents a year-on-year increase of 19.3%, up from 1,645.5 crores last year. And additionally, the company reported a gross non-performing asset ratio of 3.83%, that's the GNPA, rising from 3.56% in the previous quarter. And NPAs are also up at 1.59% compared to 1.6%. So it's a miss coming in on the PAT. Asset quality has also worsened, and the street is not reacting very well to these numbers. That stock is down almost 4% as we speak.
All right, that's M&M Financials. But moving on to Manappuram Finance, coming to you, Amar. Discounter has been in a consolidation mode for the last 6 odd months. This stock has been consolidating. Do you see a breakout now, or what do you see on the charts for this one?
So see, if you look at Manappuram Finance actually has been on a selling spree, and the stock has corrected significantly, almost from 230 levels to as low as almost 140. Today, the stock is witnessing a pullback of around 6.5%, and the stock has approached very crucial support zones. There is a high possibility that we could witness a pullback in the stock towards initially towards the 165, 170 zone, and if it sustains above that level, towards the 180 zone, because the downside seems to be capped, and the recent low of the stock is something which is definitely very important. One needs to bear that in mind. That was around 138. So anyone looking at an opportunity can look at this stock with the stop loss below the 138 levels. Upside immediate is around 165 or so. Sustaining of that level, the stock could witness some pullback towards 175, 180. Having said that, if you look at the stock from the intermediate term trend, that continues to remain bearish. So this is more of a contra trade. Those with a risk appetite, they can look at this stock at the current levels.
Okay, so those are the levels that Amar is spotting for Manappuram Finance. But Jinay, you've picked out Coforge. Good set of numbers coming in. Tell us everything about these numbers and how the street is reacting to them.
Definitely. If we first look at the earnings fine print, if you look at the revenue, it stood up about 27% quarter-on-quarter basis, coming in at 3,062 crores, and on year-on-year basis, it stood up about 33%. Also, in CC, sequentially, the revenue was up about 26%, and the EBIT margins for this quarter also stood at 11.8%, where the organic EBIT margin stood at 12.2% versus 13.6% quarter-on-quarter basis. So a bit of hit or underperformance out there. And if you talk about the PAT, it grew about 8.8%, coming in at 255 crores this quarter versus 235 crores sequentially. Now, basically, the earnings were boosted by Cigniti organic growth, which led by which was about 6.3% sequentially, which was in terms of USD. Also, the growth was driven by three segments. First was BFSI, healthcare, and life sciences segment. Additionally, the company also said that they onboarded about 13 new clients this quarter, worth around more than $500 million, and this is 11th consecutive quarter actually where the company has taken more than $300 million worth orders in the quarter itself.
Alright, that's Coforge buzzing away in trade. But Amar, MCX is another counter, and what a stellar rally. I mean, the stock has tripled in a year. In fact, it is trading at its all-time highs. Do you see more upside to this?
So if we look at MCX, so MCX has been on a tear, I would say. And if you look at the different time frames in terms of the stock's uptrend trajectory, so that continues to remain strong and positive. And also the interesting part is that the markets, we've seen some significant correction in the markets, but MCX has been relatively untouched by all this. And the momentum, if you look at the intermediate term trend or the long term trend, there is no decline in momentum, despite some of the technical indicators clearly pointing towards overheating of the stock. But the stock is not showing any signs of, I would say, slower growth. The stock did witness some consolidation towards 57, 5800 level, but then that was taken out. Then the stock has rallied significantly. So this is one stock very strong. I would say at the current levels would be difficult to say that one should buy or not, but this is one stock one can keep a close watch on corrections. One can look at the stock. The stock has a potential to rally towards the 7,000 mark immediate. If we were to look on the charts, the stock has got good support coming around the 6,500, 6,600 level.
Alright, that is MCX on the charts. But let's move on to another counter that is in focus today and doing pretty well. In fact, it's the top nifty gainer for today, and that's Bajaj Finance. That's come out with its Q2 results, and a mixed set of numbers according to ET Now polls, and some improvement in the rural B2C business. So the NIMs have stabilized and the cost of funds has peaked out, but the overall asset quality is a point of worry. It has worsened. But let's look at the numbers then. The NII saw an uptick of 22% on a year-on-year basis. PPOP was up 25%. PAT also came in at 4,014 crores versus 3,551 crore rupees, up 13% on a year-on-year basis. But GNPA is up, came in at 1% versus 0.8% on a sequential basis, and so is NNPA, that came in at 0.46% versus 0.38% on a quarter-on-quarter basis, and therefore the asset quality has worsened than the previous quarter. But also, according to the investor presentation, there has been no change in the long-term guidance. The NIMs have stabilized in Q2 FY25, and according to the con call highlights, also the new customer addition is around 15 to 16 million in FY25. The deposit growth is softer due to competition and company finding other avenues. The loan default rates are lower, and they're cautiously optimistic about the counter. Jefferies is maintaining a buy and cut the target price to 8,400 rupees. But Bajaj Finance is trading with gains of 5% right now.
Okay, let's focus to another big gainer in today's trade, and that is GMDC, because that stock is also soaring away in today's trade on the back of a stellar set of Q2 numbers coming in. That's Gujarat Mineral Development Corp. And on a consolidated year-on-year basis, revenue has come in at 539 crores compared to 383 crores, which is up almost 41% on a year-on-year basis. EBITDA has also come in at 87 crores compared to 53 crores this time last year, which is up 65%. Net profit has also seen a very sharp expansion coming in, 128 crore rupees compared to 75 crores, which is up 71.4% year-on-year. And margins have also smartly expanded at 16.2% versus 13.8%, a 237 bips year-on-year jump coming in on the EBITDA margins as well. So very good set of numbers coming in from GMDC for Q2. The stock is up 11.5% as we speak.
All right, with that, it's time for a quick breather. Don't go anywhere, because after the break, we are getting you some more buzzers in trade.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.